Hi everybody, Marcus Collins from MA Properties for a 2020-2021, now we're kind of halfway through 2021, more focus on that, Lexington market update. So, summer is upon us, as you can see. We're all in short sleeve shirts and we've had some sweltering weather over the last couple of days. So really into the heat of the spring market. So now it's really the opportunity to kind of get a sense of where the market is in 2021. So with that, why don't we get started with my presentation? Here we go. There we go. All right, so relatively easy, and give you kind of an outline of what we're about here. It's relatively easy to get information today, but it's much harder to get the analysis to understand exactly what's going on in the market. A lot of numbers being bandied around about average prices and so on, but what we're looking to do here is really to explain the details of the market. What exactly is getting on? Because if any of you've watched any of our presentations before, as you'll know, we spend a long time looking at the market. We've been doing it for a number of years, so I'm going to give you an overview here of a couple of aspects of the Lexington market to give you a sense of what's happening here in 2021 and how that differs both from 2020, which of course was a rather strange year, but also from 2019, which is perhaps more important to see where we are. So this evening, we're going to take a look at three different aspects. We're going to look at single family, then we're going to look at the luxury market, condominiums. We've kind of brought that in this year because there's some interesting information for condominiums. A lot to see what's going on in the market, specifically if we start comparing the Lexington market with surrounding towns, specifically for condos. So we'll look at the condos and then we'll kind of round it off with, okay, where are we today with 2021 and what are our predictions for the rest of 2021. Not quite able really to see 2022, but we'll give you a sense of where we think the market is. So lots of information I'm going to show you this evening comes from a couple of different sources, and I thought I wanted to just kind of show you where those sources are. First one is I'm going to put it in the middle of the camera, Lexington Market Review 2020. Every year we produce a market review. It's about 16 pages of statistics about what's going on in the market, give you a sense there. We published this in January. We do it in about the second week of January, second or third week of January. So that's available if you'd like to take a look at it. Let us know. It's online on our website, of course. If you want a paper copy, we have lots of them, so please reach out to us. We can get you that. In terms of the more up-to-date data, our website has a lot of information, maproperties.com. There's lots of information on there, specifically under the statistics tab. This is kind of an overview of what you'll see there. You'll see probably a dozen different statistics you can take a look at for a number of towns. I'm going to focus on Lexington this evening, but we have information for about 50 towns now. I keep adding to them every year. So all of the towns in Greater Boston and surrounding areas. So there's lots of information there about Lexington, but also if you're looking perhaps to buy in a different area, we may well have information about those towns too. So let's get into the single family market. So first aspect I always like to show is the inventory levels. Many of these graphs, we're looking at the long-term trend, and that's specifically the case here with the inventory graph, because it really does give us, this is from 2006, this information. You can see a lot of what's happened historically, but also what we anticipate seeing moving forward. So let me give you a quick overview with my fancy, there we go, my new toy I brought out last week. So here we are. So as you can see, we have data from 06 all the way through to today, basically. Couple of things you can see, this peak here, in that 2010 timeframe, that's the market downturn. So that's the so-called crash. Lots of homes coming on the market, as you can see, not really selling. Then it begins to decline a little bit in the next few years, but it's not really until 2013 that we see a big drop, and there it is. Now, what we're seeing in this time frame is the buyers coming back into the market. Somewhat reticent in the years prior to that. Once we get to 2013, then they come into the market really in force. And as you can see, that the inventory levels declined by about 50%. And that's not that fewer listings are coming on, it's just that more homes are selling, consuming the available inventory. This really does show you it's demand some supply in there, of course, but it really is this drop here, a facet of demand. Demand continues, of course, all the way through. A little bit of an uptick in 2019. If you think back to that time frame, there was a lot of discussion around a so-called downturn. Turns out it never actually happened. It wasn't until early 2020, just before COVID, that we got that. But there was the perception of a downturn in 19, and that influenced the market, specifically buyers becoming a little bit less keen to jump into the market, a little bit reticent on the buyer's perspective. The sellers, on the other hand, thinking maybe I should jump in now before prices crash. What that meant is we got more supply, less demand, and so inventory levels, as you can see there, jumped up. Back just a little bit higher in 2020 than we saw previously, but I have more to say about that. But you can see that low demand, that low inventory level, high demand has really continued. And it specifically, as you can see the numbers as we have 2021, much lower than we saw in 2019, getting back to the numbers that we saw in 2018 or 19. So that's what we're seeing there. So that's kind of the inventory graph, but let's break down that a little bit more, specifically looking at home sales. So how many homes actually sold? So as you can see there, peaked in 2015 and then declined all the way through to 18 and stayed relatively low in 2019. So the number of sales declined. What we saw here was sellers being somewhat reluctant or unable to put their home on the market. Aging in place was one aspect of it. The difficulty of buying their next home if they were a downsizer is also playing out here. So we saw a net reduction in the number of homes sold. Lots of demand though, of course. Buyers still wanted to buy. There just wasn't enough homes to buy, and that's why the inventory levels were somewhat low. What's interesting about this graph is the larger number of homes that came on in 2020. Here we are about 12 months or so, 14 months really, from when COVID really began to impact the market, began to impact the country for that matter. But as you can see, we quickly pulled out of that and saw a net increase in the number of home sales in 2020. Now, lots of demand towards the end of 2020, but also, and crucially here, there was some supply. The fact that, I use my pointer again, you can see here, a net reduction in the number of homes that actually were sold and came on the market. What that means, there was some excess supply. Sellers who were looking for an opportunity to bring their home on the market, and lo and behold, they brought their homes on the market in 2020, and to some extent, jumping forward, early 2021. So that's what we saw in terms of home sales, a net increase in that 2021-2020 timeframe. We don't quite have the data yet for 2021. Next time I do this in a month's time, I'll probably put the actuals for 2021 and then the predictions as I see it based on the run rate that we've had so far this year. And that will give us a sense of whether we're at 2020 numbers or whether we're at 2019 numbers. I have a little bit more on that in a minute, but I really would like another month's worth of data to be able to be specific about how we see the rest of this year and what those predictions will look like. Sale price to list price ratio in Lexington hovering around about 100%, usually a little bit lower, somewhere in the 99 point something. Jumped up a little bit in 2020, as you can see there, to 100%. A very, very strong market. That's the last 10 years. Let's kind of narrow down in a little bit here and look at what we are seeing over the last 3 or 4 months. So this graph gives us 2 bits of information. The blue bars are the number of homes that are selling. Okay, that's the number of homes that are selling. The orange line is the sell price to list price ratio. So imagine a home comes on the market at 800,000, sells for 800,000, then that's 100% sell price to list price ratio. Now, this graph is important to remember. This is where the number of homes that are sold, and we only know that ratio when a home sells. It went under agreement 6, perhaps 8 weeks earlier than this. So it's a little bit of a lagging graph, this one, in that it's showing, if you look at the orange graph, buyer demand, but not necessarily in April and May. We're looking at buyer demand in February and March. So that's something to bear in mind. But as you can see, as we were kind of in the winter months, unsurprisingly, not that many homes on the market, not that much buyer demand. It was about 100, perhaps dipped below 1 or 2 months below 100%. But look what happened as we came into 2021. That ratio jumped up to, on average, certainly in March. Remember, March is kind of late January, February timeframe, April and May. So in those early parts of 2021, we saw that ratio approaching about 105%. So that's a very strong market. We don't see those kind of numbers historically in Lexington. As I said before, it's about 100. So there's a lot of buyer demand here coming into the market, and that's forcing that sell price to list price ratio up. The reason it's higher than 100% is you have competition. Competition drives clearly the ratio higher, and therefore the price higher. And you can see that a little in the average sale price. Now, I caution you a little bit here with the average sale price because we've only got 5 months worth of data. Realistically, it's probably about 3 months worth of data because this too is a lagging graph. So be cautious a little bit about this ratio, this average, which is sitting at about 1.7. Last year it was just over 1.425, something like that. I anticipate this will come down. It will be higher than we saw last year. There's no question about that. That ratio is pushing it higher. But I want to get another month or so's more data to get a better sense of this graph to see whether it is at that high level. I anticipate just a little lower than this, or whether it's, it remains at that level. So looks very good in this point, but let's give it another month or two to see if this ratio continues. We saw a lot of high-priced homes coming on the market early part of the year. They sold as well very quickly, and that does tend to skew that average as it shifts the distribution. Same is true of the median, less so a little bit, but you can see here we went from about 1.4 to about 1.6 in terms of the median. That number of about $200,000 difference, some of the agents on our team are seeing those kind of numbers, that buyers are willing to pay $100,000 to $200,000 more for a home in Lexington at the moment. So it may well be that we've seen a bit of a step up, purely and simply because we have lots of buyer demand right now, outstripping the supply actually. And actually, as you'll see in a minute, supply is a little bit higher too. But this is a very, very strong market. And it may well be that we'll see an average and a median about 150,000 to 200,000 higher than we saw in 2020, which is in of itself was larger than we saw in 2019. So it looks very, 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 for us from a seller's perspective, a great market, very much a seller's market. From a buyer's perspective, perhaps not so much, in that there is lots of competition, and that is driving house prices higher. And I have a little bit more to say about that in a moment, about why that's the case. It's interesting to see how the run rate, if you like, in terms of cumulative sales look like, in terms of home sales. And let me kind of show you this on this graph. So this is cumulative sales. What it is comparing 2020 to 2019. And I've put this in, I've got the 2021 data in a moment, and I'll show you that. This shows very clearly two things. The first thing it shows is this. In that April-May 2020, we saw a net reduction in the number of homes that came on the market. As soon as we got to early May, and this was the big question mark from us 12 months ago now, what was going to happen to the market? What happened is the buyers and the sellers came back into the market en force. And as you can see, it was a very strong growth in terms of home sales, carrying forward such that at the end of the year, we had a large number of home sales over and above what we had in 2019. You can see that a little clearer with this graph, which is the difference, the change between 2019 and 2020. The dip you see in May is COVID. It's the impact of that initial impact of COVID. As soon as we got to May, though, as you can see that graph, the gradient of that graph changes, starts rising, and towards the end of the year, we were upwards of about 70 homes more selling in 2020 than we'd seen in 2019. Now, let's take a look at 2021 versus 19.2. I don't want to show it necessarily against 2020 because I don't want the impact of COVID. And really, the question I'm trying to answer here is, Are we going to return to the 2019 numbers in terms of number of home sales? Or is there something else going on? Has there been a change in the profile of home sales, if you like, because of COVID? So I'm comparing 2021 with 2019. So for those two reasons there. So here we have blue in this graph is 2019, and the pink color, the orange color, is 2021. So again, 19 against 2021. As you can see, here we are towards the end of May. I have data through May. We're upwards probably about 40 home sales more in 2021 versus 2019. So we are definitely seeing more sellers coming into the market and very strong buyer demand. That shows there. What I would like to see, and we're beginning to kind of see this a little bit, but I want another month's worth of data to be able to say with accuracy. If I now do the difference between those, you can see a sharp rise in the number of homes in 2021 versus 19, but a slight slowing down in that second half of May. Now, I want to see what happens there. That might just be Memorial Weekend. I do this on a weekly basis. I kind of cumulative per week, not per day. That may well be that it's Memorial Day and the graph will continue. Hard to tell. The reason I'm kind of hesitant here is that clearly as sellers begin to understand or begin to hear and begin to see, hopefully if they watch these seminars, that the number of the house prices have risen steeply, that means more sellers will come into the market. House prices rise, economics 101, price rises, more sellers come into the market. And that's clearly what we saw in the early part of 2021. And anecdotally, in the sellers that we're talking to now and those that are bringing their home on the market, moving forward, they are beginning to say, I'm looking to take advantage of this market. It's very, very strong. Now seems like a great opportunity to come into the market. At some point, we'll basically run out of sellers and we will get back to the more steady state. And the question I think we'll be able to answer at the end of June is, are we now at a steady state? We've had that kind of bolus of sellers come on the market. Then it's now relatively static. Comparison, we're going to run parallel with what we saw in 19. Or we can continue to see more sellers coming into the market this year than we saw previously. And then we'll begin to kind of compare ourselves to 2020 as well, to see if we're going to be on the run rate, if you like, to see that large increase of sellers. So what I'm trying to figure out here is, is this, has COVID changed the way sellers react? Are we seeing more sellers in the market longer term than we've seen previously? Currently, yes, that is, and the house price increases is kind of driving that. So a little bit more data, I think, one more month, and I think we'll have some very good information to be able to say with some accuracy in terms of what we see for the rest of 2021 in terms of the number of sellers in the market. From a buyer's perspective, it's pretty clear. There's not enough home sales. Even if this increase continues, there are just not enough home sales to satisfy today's buyers. We brought home two homes that we reviewed offers on today. One of them had 8 offers, the other one had 3 offers. There are still more homes on the market than there are buyers in the market today. So it will continue to be very much a seller's market. The question is, to what extent will it be a strong seller's market or a kind of good seller's market, if you like. So that's kind of single family. Thought that was kind of useful to put that in perspective. As I say, looking forward to another month's worth of data. That will give us kind of 6 months. Realistically, that's about 4 months of real data in terms of the averages and things like that. I think we'll know a lot more in a month's time. So stay tuned for that in a month's time. Quick look at the luxury market. This is information from the market review. It's interesting to look at the comparison of 2020 versus 2019, or historically for that matter, actually, to see what's happened. So first of all, home sales. As you can see, I'll explain here, the blue bars are existing homes and the green bars are new construction. So as you can see, 2020 saw a large increase in the luxury market. Our definition of luxury is over $2 million. So that's just kind of an arbitrary number, but it seems kind of we've been tracking that for a long time. And so over $2 million is our classification of luxury. And as you can see, the over $2 million homes saw a dramatic increase. over what we've seen in 19 versus 18 and historically. So that's kind of interesting. Some of that is price appreciation, but not that large increase. So we are beginning to see more expensive homes selling. You can see that in a little bit more detail if we look at the distribution. What I've done here is I've broken down that luxury market by price point. 2 to 2.5, 2.5 to 3, and then 3 million and above. The area that's seen the biggest increase, if I can kind of show you here, is that 2.5 to 3 million. A lot of new construction in that area too. Developers, moving into that highest price point, $2.5 to $3 million. But as you can see, we had 4 in 2019, and then that jumped to 20 in 2020. An increase in the number of over 3 million, but this is the big one here, as we saw, say, a lot of developers starting to move up from the $2 million price tag into the 2.5 to 3, 2.75 and so on. So that's really what's driving a lot of the luxury market in Lexington, is that developers into that $2.5 to $3 million price tag. Interesting to look in a little bit at the price distribution in terms of this area, sort of where is that? And as you can see there, this is the area that we see the large increase in there. That's the area that we see the large increase, and it's continuing. 2 to 2.5 is always strong, clearly, but we're seeing a lot of strength here now. This is made at April 2021 in that $2.5 to $3 million price tag. So we are beginning to see a lot of activity again in those higher price ranges. So I would anticipate, when we get a little bit more information, that we're going to end up with a very similar price distribution in 2021 that we saw in 2020. So the strong luxury market will continue into 2021. That's for sure. Condominiums. We don't normally look at condominiums, but I thought it was useful this year to get a sense of it, because there's something interesting going on here. Condominiums, here's condominium sales. Blue is existing, and then the greenish color are the new construction where they built the developments, if you like. So you can see there's a jump in the number of new construction as a subdivision or a condominium complex really comes online. You can see that there. So the number of existing condominiums, sales of existing condominiums, roughly static, somewhere in about the mid-40s. Potter Pond, Drummer Boy, and so on, Courtyard, and so on. That's what the blue line is there. It's pretty static in terms of the number. So it fluctuates a little bit, say, because of the new construction. In terms of average sale price, little bit of an increase, not very much though. If you think back to what we saw in single family, potentially we're jumping from 1.4 to 1.6, a big increase in the average sale price of single families. We're just not seeing that in the condominium market. I should explain to you, the blue is historical, the green is a month by month. So we see some fluctuations, specifically if we have a low number of, in this case, condominiums coming on the market. That orange line through the middle, reddish line through the middle, that's the running total in terms of the average. So as you can see, we're running at about the same level that we saw in 2020. Big comparison to what we saw in single family. The reason for that is kind of interesting. If you look at the average sale price, but back out the new construction condominiums. So here I'm looking at, as I said before, Drummer Boy, Pfeiffer Lane, Potter Pond. I mean, those existing condominium complexes, in general complexes too, and that's kind of important. As you can see, the average sale price of an existing condo, backing out new construction, has actually been declining over the last couple of years. It peaked in 2018 and then it started to decline, which is the information you can see here. Question is, why is that happening? If you think now about the average condominium price in, for example, Arlington and Lexington, I mean Lexington this evening, but you can kind of compare the two, it's about the same price. The big difference, though, is the condominium fees, the HOA fees. Most of the condos in, for example, Arlington, not just Arlington, I just use that as it's the next town in, are within 1 or 2 family homes, perhaps a triple decker, maybe a double decker home. So the condo fees are relatively small in comparison to the condo fees where you have a swimming pool and a tennis court and so on in many of the developments we have here in Lexington. So actually the condo fees here in Lexington about double what they are in an Arlington. Now, what that means, of course, is that buyers have a choice. They can buy more in Arlington because they don't have that. The difference is about $250 a month. They don't have that additional $250 a month they have to pay for the condo fees here in Lexington versus Arlington. They get less, of course. They do get the facilities in the condo complexes, but when you're looking at your budget, there's a $250 a month difference that they could spend on a mortgage versus the facilities they get. So I think most of this reduction we're seeing is because the prices are about the same, but the condo fees double in Lexington what they are in Arlington. So that's a little worrying, I think. And given that that profile of condominium is not going to change, we are building only condo complexes really in Lexington. All of the new constructions in a condo complex, that inevitably has higher HOA fees. And so the characteristics, the profile of condos in complexes will remain in Lexington, whereas in Arlington, for example, the condos will remain to be in 1, 2, 3 family homes. And so that difference in HOA fees will continue. And that I predict will have a downward impact on prices, condominium prices here in Lexington. Big difference, of course, between condominium and single family. So that's a little worrying for the condominium market. We'll see how that plays out this year, but it looks very much like that price is either going to be flat or slightly declining for existing condominiums. So that's kind of something to think about. We'll be tracking this one now in 2021, as we go into the 2021-22 market review, at the end of the year. So condominiums. Now, what I thought I'd do now is give you a kind of bigger perspective. That's the data. That's all very well, but why is this happening, Marcus? What's going on? Why are we seeing a large number of buyers in the market? Why are house prices increasing as much as they are? What is actually going on in the housing market? Here's a graph I took from, we subscribed to a service called Keeping Current Matters, and they put this out, and I thought it was very interesting to see what a Realtor.com survey had in terms of the changing housing demands as we move out of COVID and potentially moving forward too. Clearly not everybody's having to commute into the office. Perhaps they're going hybrid, maybe they're staying at home. So there's a lot of things changing, and people are reevaluating the homes that they're living in. More importantly for us here today, of course, the homes that they're looking to buy. And they're beginning to ask that question, as number one says, does the home meet my needs anymore? And in many cases, the answer is no, it isn't. I don't have enough office space. I'm going to be spending more time in my home. I want a bigger home. I want a better home, whatever it may be. We are clearly seeing a number of sellers coming into the market to take advantage of rising prices. So that's clear. They're looking to make a profit in this current market because it may not continue at the rate that it's continuing. We are dominated a little bit here in Lexington by the downsizers, and I'll talk more about that when I talk about demographics. So people beginning to think, I don't need as big a house as I begin to think about downsizing, as the children, for example, go off to college or leave home completely. So they're beginning to think about, I don't need this actual space. Maybe it's a good time to relocate. So relocate, that's a relatively large part of the Lexington market too. Change of lifestyle, I want to be closer to friends, family, all of that, need to reevaluate that whole, where do I want to live? And potentially they're looking for different, amenities in the town. Schools are always really important, but they kind of begin to think about, I'm looking for much more of a community. So all of this, changing demands as people begin to reevaluate the home that they currently live in or the home that they want to live in moving forward. And that's really changed because of COVID. And that's a relatively long-term effect. Because if you're moving to a home that's slightly larger because you need a home office, Even if you have to go back to the office 3 days a week, that's not going to change. You know, it's a decision buyers and sellers are making, and that's a 5, 8, 10-year decision that they're making. It's not going to change, you know, on a dime if they have to go back to the office, you know, for 3 days a week, whatever it may be. So we are beginning to see a longer-term shift in terms of housing demands as say our sellers reevaluate the house they want to live in. I mentioned before about downsizers, and it's interesting to look at some demographic data. This is demographic data from the US Census. It's actually 2015 data. Hopefully we'll get latest updated data this year, but the shape of it, you know, is important and not necessarily the absolute values. Two areas on this. This is how many people there are US-wide in each age bracket. Two areas are really important. The top yellow bar is the baby boomers. That is the children born after World War II, now getting to retirement and therefore downsizing age. So they're beginning to think about, I'm looking at my next home, which is smaller than the one I'm currently in. The lower orange bar are the millennials, the first-time home buyers. They are looking to jump on the housing ladder. And so we have these two groups, in many cases competing for homes. If you think about an Arlington, a Somerville, Watertown, in general, the house prices are somewhat lower. Houses in general are smaller too, as a consequence of that. Or the way around, the prices are low because of the consequence of smaller houses. Both these groups are looking at those towns as a very good destination. Yes, you know, think about, pick an Arlington, for example, close to Boston, close to the amenities that Boston provides, great school system, good first-time home buyer, because the average price there, probably about $1 million this year. Downsizers thinking this would be great to move out of a Winchester or a Belmont or a Lexington into the next town in, because guess what? I'm going to be close to my circle of friends. And so a town like Arlington very much sees lots of demand. And we've seen sale price to list price ratios of 105% for a long time in Arlington. So it's been a very, very hot market because these two groups are competing for that. Now, thinking about downsizers out of Lexington, that of course frees up homes for people to move up to, be it first time, less so in Lexington of course, or second or third move up buyers moving into the town. So it kind of frees up some supply, and that's why what we're seeing, these two groups both, you know, drive the housing market, if you think of it in that respect, for that. Downsizers moving out of the town, allowing first-time home buyers to move in, second-time home buyers to move in, and so on. So those two groups are driving the market, and that looks to continue too. The other one that people worry about a little bit is mortgage interest rates. Interesting to look at these mortgage interest rates, because we've been tracking this now for probably 5, 6 years, maybe even longer actually. Interesting, and I'll kind of highlight one area on this. 2018, we were beginning to ask, you know, is that going to increase to the point that it's beginning to impact buyers' ability to repay? And so will this high number of 4.5 actually begin to put a dampening impact on the market? Turns out that's not the case, and look at the numbers we have today. Blue is the historical numbers all the way through to Q1 2021. The green here is the predictions from the bankers. They're not very good at this, I should add, in terms of where that interest rate will go. Through 2022, it looks to be less than 4%. So clearly a very low number. This is allowing buyers to kind of leverage that fact. It's allowing many people to refi as well, of course, but it's allowing buyers to buy into this very hot market because interest rates are at historical lows. This goes back to 2009, and we've never seen numbers at this level for so long. So mortgage interest rates very low. That's kind of an enabler to the market, in that it doesn't put any kind of dampening effect on people's ability to repay. So what does that mean in terms of predictions? Let's kind of get our crystal ball out for 2021. So we already know a little about what 2021 has brought. It has definitely brought more buyers into the market, looking to that, reevaluating their housing needs, moving out perhaps of the inner city, moving out to the burbs. So there's a definite shift in terms of the sheer number of buyers there are in the market. It is much, much higher than we have seen previously. Not all those buyers will have bought. Some will clearly. We've probably had 150 to 200 sales, single family sales here in Lexington so far this year. So some of them clearly will already have bought, but there are more buyers than there are homes, and that will continue through the rest of 2021. Many buyers beginning to get a little bit jaded by the market. They've lost out too often. They put offer after offer, but they've been beaten in terms of price. So you either compete or you kind of drop to the wayside. So many will kind of drop out, but still there is a large number of buyers in the market, and that will continue. So from a buying perspective, there will be lots of buyers in the market. It will drop, as I say, as the year goes on, but it's still very, very high. In terms of the sellers, we've definitely seen sellers coming into the market because of rising prices. They too are reevaluating, do they need to be here, do they want to downsize? But there's also a larger number of sellers thinking now is a great time because house prices are so high, I want to capitalize on that high price because I've always wanted to move to New Hampshire or Florida or Carolina or whatever it may be. And so now's a great time to do it because it's unlikely that these house prices will remain this high moving forward. That's their thinking. So many more sellers in the market, but still a seller's market because there are just more buyers than there can ever be sellers, really. Now, big question whether that will continue at this same rate of growth. I anticipate not. I think we will, as we get into that June, July timeframe, already in June, we'll begin to kind of track parallel to what we saw in 2019, but at a higher level. I can't see it continuing at the high rate of growth we have seen in the prior months. Bear in mind too that here we are in sweltering June, July is coming very quickly, and then August, and we're in the middle of the summer months. So and there's going to be a lot of buyers and sellers for that matter who are looking to take some vacation this year, given that we couldn't do it last year. And so I do think we will see the traditional slowdown in July and August that we always see as people go away on vacation. It'll come back a little in September, but we're at this higher level. I want another month's worth of data, but I have an inkling that what's going to happen is we will begin to track parallel to 2019, but at a higher number in terms of the run rate of sales. So we'll continue to be a seller's market, perhaps not as strong as we've seen previously, but I think it very much a seller's market moving forward. And then in terms of the buyers, well, there is still competition out there. Buyers are still willing to pay over the asking price, as you saw in the average. If that continues, anywhere from $100,000 to $150,000 to $200,000 more in the average and the median sell price in 2021 versus 2020. Let's get another month's worth of data to be able to kind of put some accuracy to that, though. So that's the predictions for 2021. A very strong market, certainly from a seller's perspective, and a tough market for the buyers out there because there's a lot of competition clearly. So thank you for watching here. We do this every month. Hopefully you enjoy it because we really, we want you to really be the smartest person at the closing table. We want you to understand exactly what's going on in the market, understand and maximize your potential to buy a home, but also your potential to sell for the highest price too. This is really why we do it, because we all benefit really if we know more about home buying and home selling. So that's kind of where we are with them. That's why we do this seminar. So thank you for watching. We will do this again in a month's time. We'll have June's data, which I think will put a better spotlight on what we can expect to see through the end of the year. So with that, I'll say thank you for watching, and I'll see you again in hopefully a month's time. Bye.